It's a red day on the stock market. All three of the major indices ended down nearly 1% or more on the day. We're going to be taking a look at some big stories that are shaking up the stock market, starting with Netflix stock split, which we saw in our portfolios today, as well as some moves by Berkshire Hathaway when it comes to Apple and Google. I'll be sharing my real numbers and why this stock market news matters to our portfolios. I am Lisa J. Stocks. If you're new here, subscribe, like, and make sure to hit that notification bell so you can keep up with all of my videos and live streams. First, let's start with Netflix. Down 0.83% on the day. When it comes to Netflix, my shares multiplied due to Netflix just having their 10-for-1 stock split. So, a stock split is like slicing one big pizza into 10 slices. More slices, shares, the same pizza. Total value of your investment. It doesn't change the company, it just changes the price of the share. So before the stock split, Netflix was over $1,000 and now it's $110.29 per share. I only had one share in my portfolio, but as of today, I have 10. Stock splits usually add a lot of hype. It's taken as a signal to the investors that this is a strong company. Over the last year, Netflix is up 30% due to their subscriber count climbing, ad tier booming, and them cracking down on that password sharing. Okay, so when it comes to Netflix, I have one share in my portfolio, which I bought at the middle of last month in October after cutting some of my Disney shares from my portfolio that I had been holding for a couple of years and was currently down 2% on. Lost my patience with that, so decided to cut most of it. The cost of my Netflix pre-split, my average is $1,120.50. Post split, it's $112.05. And of course, my one share has turned to 10 shares. The closing price we see here, a little over $110. So my portfolio value when it comes to Netflix is $1,100.90. I'm down about 1.75% or $20, but I'm not stressed. This business has been crushing it as compared to other streaming services like Disney with over 3 million plus subscribers. I made my decision to add it to my portfolio before I knew about the stock split coming, so makes no difference to me. I'm holding it because it is the leader when it comes to streaming services. And I'll be holding it for the long term, but keeping an eye on how things settle now that we are post split. Now, let's take a look at Apple. Down 1.82% on the day, facing a pullback, which is totally normal. Sometimes stocks dip after having a quick run up. Over the last month, Apple's up 6.0%, and over the last year, up 17.30%. When it comes to Apple, it's the first company that I started investing into outside of my 401k when I started building my own taxable accounts, a product I've been using for years. The whole ecosystem is all throughout my household, but the stock has tumbled a bit due to the US markets dealing with inflation concerns, a slowdown when it comes to those iPhone upgrades, demand issues when it comes to China, and Berkshire Hathaway, Warren Buffett's company, trimming their shares of Apple from their portfolio. But this is Apple stock. They're still making $100 billion in quarterly revenue. I have many other positions that I'm more focused on building up than Apple, but a pullback could be a time for investors to build out their position if it's not completed yet. I love dollar cost averaging into my long-term holds on the dip. And when it comes to my Apple position, I'm up 72.6%. Not panicking, not concerned, just like my other blue chip stocks for the long term. Now, let's flip to Google, which is thriving on the day, up 3.11%. Google, aka Alphabet stock, is on fire. It's up 12.52% on the month, and over the last year, up 62.59%. And here's a few reasons why: increased AI growth, Google Gemini getting stronger, cloud revenue up 30% year over year, strong numbers when it comes to advertising, and just overall becoming more efficient and profitable. But headlines like this: Warren Buffett's Berkshire Hathaway revealing that they took a stake in Google stock worth nearly 5 billion. It is huge news that also impacted the stock. At the same time, they trimmed about $70 billion worth of Apple stock from their portfolio, bringing their Apple position from about 915 million shares down to about 600 million. Still a huge stake from my perspective, but this is how they go about rebalancing because their Apple position was too large. So, why did they choose to add Google stock? When it comes to searching, Google holds 90% of the market. YouTube is thriving. They're gaining market share when it comes to their cloud business. Their artificial intelligent investments are bringing in real revenue, and it's a good price, cheaper than most of the other mega cap companies. So basically, it looks like Buffett, Berkshire Hathaway thinks that Google is a more undervalued AI play, on track for real cash flow and real growth in the future. And when it comes to Google in my portfolio, I'm currently up 115.06%. Definitely one I was already building into for years now. One of my larger positions, like Apple, Berkshire Hathaway's moves have not changed my opinions of these companies, but I definitely do look for the moves that Berkshire Hathaway is making when it comes to adjustments to their portfolio for insight on what those big names, those whales are doing. So Netflix stock split is complete. I'm going to be holding and letting everything settle down, continuing to hold on to my Apple stock and realizing that pullbacks are normal, and glad that I incorporated Google into my portfolio some time ago and have gotten so deep in profit. I'm not chasing headlines. I'm just doing my research and having a full understanding of what's going on. The fundamentals behind the businesses is what matters. So drop me some comments. Let me know, are you holding Netflix, Apple, or Google in your portfolio? As you can see from my numbers, down slightly on Netflix, but I just got started last month, while Apple and Google, which I've been building into for years now, is easier to deal with and even harder to notice when we are having a red day. I'm always watching the market, so I'm in tune with it. But overall, the newer positions or older ones that are slightly in the red are significantly outweighed by those long-term positions that I am up over 75% on. All right, so I'm wrapping up for today. Make sure to leave me some comments if you're ready to open a new portfolio. Use my referral link for MooMoo. It'll be in the description and pinned in the comments. We'll both get free stock and you'll be supporting the channel. Make sure to subscribe, like, and hit that notification bell. Okay, bye.